Good morning. I'm Noah Mercer, and welcome to the FinMonkeys Morning Brief. Let's dive into what's moving the markets today. First up, Treasury yields are climbing as investors push higher Treasury rates higher, hinting that the Fed's stance might be a touch too accommodative, and that spells higher borrowing costs across the board. At the same time, crude oil is edging up, nudging yields even higher and putting pressure on equity valuations, which means tighter consumer wallets and a bite to corporate earnings. Finally, Nvidia just reported a blowout profit, but the excitement fizzled as the broader market stayed weak. So what's framing today's market? It's the tug-of-war between rising Treasury yields and the impact of oil-driven price spikes. The bond market's push higher has been a headwind for the S&P, Nasdaq, and Dow, while the energy sector's climb is adding another layer of stress. Yet, as we'll see, there's a shift coming as those pressures begin to ease, giving the equities a chance to catch their breath. When lower Treasury yields finally slipped and oil prices softened, the market got a brief lift, a rally that showed how quickly sentiment can turn when rate pressure eases. But the earlier yield-driven dip still mattered, pulling down the major indices and tightening financing for big names like Home Depot and others. And even though Nvidia's earnings were a home run, the broader market slipped, reminding us that sector-specific fireworks can't always offset macro-level headwinds like rising yen. That's the FinMonkeys Morning Brief for today. The next thing to watch is the Fed's next rate decision and upcoming earnings from AI-heavy names for the next. Thanks for listening to FinMonkeys. We'll be back tomorrow with the next market setup.